Hey there, I'm Zack Seward. I'm the Deputy Editor-in-Chief of Coindesk. I am joined for a really good and hopefully fun panel on DeFi stuff. We're talking about the current trends in DEXes, decentralized exchanges, for anyone not familiar with the shorthand. And we have a really great panel here today. We have Milan from Orca, which is killing it in the Solana ecosystem. We have Nikita from 1inch, which is on all sorts of networks, doing many things in the decentralized exchange aggregator space. And we have Yenwen from Perpetual protocol as well. Thanks for joining us all today. Happy to be here with you. So, elephant in the room, it's been a pretty brutal time in the markets these last few weeks over in the Terra ecosystem. I think we all know about that pretty significant collapse in that little corner of the DeFi world. So you all are all sort of on the front lines of DeFi, watching market activity day in, day out. Nikita, I'm going to toss this to you. You may have the broadest base perspective given that 1inch exists on a lot of chains at present. What are you seeing in the market? What has been the effect of the Terra Luna collapse? What's up?
Right. Well, we don't see that people or trading activity is slowing down. Certainly, the market sentiment, everyone is afraid of risks, and there are people who want to sell their tokens or, decrease the risks, of holding various assets. Yet, when the Terra and, the market was going down, 1inch actually had, a record volume. We've processed more than 2.5 billion through our smart contracts on Ethereum blockchain only. And, we've seen a large spikes on the Binance Smart Chain and many other chains where we are present. And, it feels like the market had this hit, yet, everything is stable, all the mechanisms are working, people are still trading, we see a lot of buying activity. So, nothing, it feels like the world will move on and everything would be good and just as usual.
Is the general gist flight to safety, people exiting positions and taking a little bit of safe harbor in stable coins, or what's sort of the general vibe that you saw in the wake of that event?
Well, you're absolutely right. Stable coins did a record volume. People were trading them massively and exiting some tokens. That's why, the whole market was slightly going down. Yet, this pattern has stopped. Now everything's back to normal. People are accumulating assets. We see, good trends. So everything's quite healthy.
Okay, I'm going to toss this question to Milan. I know you guys have some pretty impressive stats to share. Actually, Nikita brought them up. I didn't do my homework to that extent, so shout out to Nikita. So Milan, if you just catch us up on where Orca is in the Solana ecosystem right now, and also, what you're seeing in terms of current market trends.
Yep, for sure. So generally agree with Nikita on everything that he said, where even though this was kind of a shock black swan event in the system, everything functioned perfectly well and kind of as intended without external intervention, which was very cool to see. In terms of Orca itself, so closing in around 300 million TVL, doing about 150 million average daily volume plus every day, and over 100K users every day. So that's been really strong growth to see. And beyond that, I think the most exciting thing is that we've launched concentrated liquidity on Solana. So we're calling it whirlpools, and those will basically allow you to have a lot more capital efficiency. So I think even in terms of this market downturn, we launched these pools maybe about 8 weeks ago in beta and publicly around 4 weeks ago, and they've seen a ton of traction. And generally it's been good for the ecosystem because you have to provide less rewards, less incentives, and still get similar levels of slippage for traders and more APR, more trading fees for LPs.
Gotcha. Another I love the maritime theme, the nautical theme, all things Orca. Gotta love marine biology. Shout out to that. But some version of the same question to Yenwen. Over at the Perpetual protocol, what are you guys seeing? What's your current read on the market? What stood out to you in these last couple of weeks as new and novel as the crypto ecosystem was dealing with a pretty big event?
So I think we actually see different things. Not only ourselves, but by talking to market makers, the partners we work with. I think, the market has cooled down. Of course, when Terra crash, it actually generated lots of trading volume because lots want to exit, other people want to jump in, to take a chance of that. That the day or that week actually generated lots of trading volume. But after that, I do think that most of the liquidity provider, they're kind of scared and then actually withdraw the liquidity I mean, on our platform, I think we see that, and also, I mean, like talking to like other market maker, they also see the like the total like trading volume actually shrink a lot. I mean, close like centralized exchange and decentralized exchange. So yeah, just like maybe like different, we are doing derivative, so it's actually more sensitive to, I mean, like to the market condition. So yeah, I think that's probably the case.
Okay, so let's riff on that. I mean, I'll throw this one to Nikita. If we are sort of in the early innings of that crypto cycle in which we see the bull and then the bear, what is sort of the DEX strategy for, let's assume that we're entering a crypto winter? How do DEXes sort of differentiate themselves, stand out, and stay strong during the lean times?
Well, I feel like, it's all about building, this loyalty of traders, improving onboarding processes, making, more friendlier user interfaces, and distribute the tokens, especially since a lot of projects still have like a lot of treasury, like war chest. They can reward people for certain activity, for staying loyal, for, sticking to one platform. Plus, I feel like DEXes are still in the very early stages of the development. And I love how, AMM managed to, solve this order book problems that, early DEXes on Ethereum blockchain had. And, we still have a lot of problems that we can fix, like improve capital efficiency, migrate impermanent loss, prevent front running, sandwich attack, and all kind of move shenanigans. So I'm very, very passionate and bullish on DEXes. I feel like we'll see a lot of new cool things happening from the new project and from current market leaders. So, you've got to like build and, stick with your community and, make sure they are happy and in the right place.
All right, Milan, I'm tossing this to you. How do you keep DEX users happy? Is it just, token incentives? The more tokens, the better, grease the gears of commerce. What's the best way to make this a sustainable way to keep people around and to keep it, a sticky experience for folks?
Yeah, for sure. Generally, I think the token incentive is very important to bootstrap a protocol and bootstrap different pools or different initiatives that you're doing, but definitely not a very sustainable way to grow a business or a protocol. I think you mentioned something about like what was something stand out from this recent crash that was interesting. I think pretty much two observations. One was that the devs and the builders didn't leave the building. So like the interest there is just continuing to go up. We launched like a Whirlpool's grants program for builders to build on top of Orca. And the interest has been really, really strong, kind of surprisingly so. And I think the second thing was that everyone's focusing more on education, or at least I've seen a lot of protocols kind of starting to up the education, whether it's on stable coins or on DEXes or how to use concentrated liquidity. So I think that will be at least a big focus for Orca. And I think generally an ecosystem that produce a lot more materials to educate your users on the risks, on the benefits of it, and like really understand how to use this tool to your benefit rather than kind of just playing with it and getting your feet wet.
Was that the beginning of like Orca's like learn to earn strategy? Is there going to be a learn to earn aspect to this education push, or is it just more straight up, here's some resources for learning how to do it better?
As mentioned, probably some learn to earn to bootstrap that program, but hopefully at some point, like the content is just strong enough, the educational aspect is good enough that people will come without any additional incentives. Gotcha.
And so, yeah, Yenwen, sort of on the derivative side, what's the approach to a leaner market from where Perpetual protocol is sitting?
I actually totally agree with Milan that the developers are still scale within the ecosystem. So I would actually say that composability, like trying to invite more other developers built on top of us, is the key for more like a long-term success. Either like Perpetual protocol, like other projects as well. One thing I think that's really interesting is that we actually talked to a lot of projects that building like strategy votes. So, kind of like Yenwen or like other, so they build this strategy, they combine derivative with the swap market, and then, the retail can deposit and then generate yields. But because of Anchor provides, everyone like 20% yield. So actually, the retail just go to Anchor, right? So this like provider is to get spotlight because Anchor, but because Anchor is crashed, and also it's not really. People are not really that into like yield farming round. So I would say it's actually a good time to really build out this strategy. There are like different ways actually you can have like static like good yield based on all the DeFi projects. We just like don't really see those like projects like popping out because of other things. But right now, I think it's a good time.
I want to stick with you because you mentioned, the interesting sort of observation that people aren't really into yield farming right now. That was the thing that kickstarted, DeFi Summer 1.0 back in 2020. What are people into? What's going to be the thing that catalyzes that next big DeFi summer or whatever the season may be? What do you think?
I think for me, definitely Steppen is one of the things that people are so into right now. So I would say, of course, like mechanism wise, it's still a little bit bouncy. I don't know. It might be, but still, I think that it actually gets a lot of interest. They don't really have like marketing budget. People just like jump on that. So I see a lot of my friends just in shoes. So like they just like working like in the city like all the time. So I think that's really interesting. So I would say that is the trend. I would definitely expect that there are more this kind of like kind of like games like with like a real world like application like popping up.
Okay, Scott, so you mentioned Steppins or the engage to earn game in the fitness space. Milan, we were chatting before the panel, and I know you've seen some interesting activity spill over into the Orca world because of Steppen as well. If you could share more on that, I'd be curious to hear more.
Yeah, for sure. So I think quickly before jumping into like the Steppen specifically, one of the main things that I think will drive DeFi users will be mobile support. So I think like rather than reinvent the wheel, what happened with the internet was you got internet on desktop and then quickly mobile, and mobile expanded the number of users by a ton. And we're starting to see it on Solana, at least with like Phantom and a few other wallets. So I think mobile support will be big. And I think that's one of the main reasons that Steppen grew so quickly. It's because they have like a pretty strong mobile app and very accessible to anyone and very accessible to kind of check in every day and use it multiple times. I think I agree with that GameFi will be very interesting in the future, where all of these games will have different tokens. Some of them will have utility, some of them will have governance. Maybe some of them are just for fun, like Karma Points on Reddit, and users will want to trade between all of them. I think DeFi will still be the backbone for that. So these apps will essentially abstract away all the complexity, and users will know that they're using a wallet, but it'll be a very simplified wallet, and they will know that they're sending a transaction on a blockchain, but really they're not going to look at the block explorer or anything else. They're just going to see it's out there, it's confirmed, cool. My action was completed. I think that'll drive a lot of new users.
Got it. So what's the next step in Milan? What's the next activation that's going to get people excited about this thing?
Not sure, but it's probably a mix of NFTs and DeFi. Like that does seem to be a pretty powerful concoction. So some sort of mix of NFTs to focus on the community building side, and then DeFi to focus more on like the utility of doing different actions on chain.
Gotcha. Nikita, I want to get you involved in the conversation. I want to change gears and go to cross-chain stuff in a bit. But first, I'm going to ask you, if people aren't into yield farming right now, what are they into? What do you see as the next big thing that moves the needle on DeFi adoption?
People are not really into yield farming. we know it. At one point in time when we were running incentives and on our AMM, we had over $2.5 billion locked on our smart contracts. And when we stopped doing that, in 1 week, our TVL dropped to 300 million. So, 2.2 billion was like mercenary capital and simply like walked over to the next thing they see. And they're not using these tokens for the right purpose. And actually, I think a lot of new adoption might come from building more efficient, more advanced token economics. I love on-chain governance, and I'm not a big fan of governance tokens. I mean, they do a very important, thing they control, and it's the only way to influence like capital on-chain. But at the same time, we need more features, more use cases, more, transparent systems where, community is safe and sound and know how everything's running and operates, and also can get some kind of traction out of, the protocol performance without making a token a security. So I'm a big fan of, more advanced token economics. I think this will happen. Plus, from mass adoption, I feel like a lot of Web 2.0 all, companies and leaders will start to enable blockchain features, will have like wallets and would allow like, staking or swapping or like NFT. What's happening with NFT right now is like Twitter and other platforms, integrating them. So I think DeFi is also will be integrated, and this will bring a lot more users who will see that crypto is not scary and not as risky as they thought.
That the 2.5 billion to 300 million or whatever, that's just a fantastic example of, I think it was Andre Cronje coined, liquidity locusts as being the scourge of all these yield farms, right? This horde of people sort of moving to one incentive, sucking those tokens dry, and then moving on to the next one, rinse, repeat, etc. So that's a really striking example. All right, so I'm going to go to the cross-chain conversation. I think, before Terra sort of imploded, the last big blow up that sort of captivated people's attention was the wormhole exploit, in which 320 million in crypto was pilfered by way of a cross-chain exploit. It seemed to provoke a lot of conversation about what the future of sort of multi-chain DeFi looks like, if bridges are going to be tenable or not, if they're inherently faulty. So I'm going to throw that to you, Nikita. I mean, I know 1inch is deployed on a bunch of networks. I forget the number at this point. What's your approach to sort of multi-chain, cross-chain? What works, what doesn't? And how do you solve the problem of, stranded assets being on one chain when you want them to be somewhere else?
Right. Well, let me tell you first that as a user, I'm a huge fan of cross-chain. I think, we really need that kind of stuff. I want my transactions to be cheaper, and sometimes, you want like move your tokens elsewhere on where something's happening. And yet, and cross-chain is actually number one ask from our community. Our 1inch users, they keep on pushing our community managers to like, guys, let's go cross-chain. How we can help you? Like, how we can make it happen. Yet, our founders have said it out loud many times that, 1inch is not planning to engage into cross-chain activity because we see that we cannot provide, the same user experience as we have right now. There are a lot of potential risks and attacks. They can be economic and technological. And, we are happy if someone builds on top of us. And we actually have a few examples where we provide our API, and our APIs work on 8 different blockchains, and we keep on growing the number of networks where we are present right now. If someone wants to, connect our APIs and make swaps, and, they have a vision how they can, reduce the risks to the minimum, we are happy to, work with them and showcase them and, keep the development of the industry. But, currently the infrastructure is not there. But I'll let my colleagues here to discuss more, especially from the technical side of things.
Yeah, Milan, Orca is, pretty synonymous with Solana. What is Orca's view of cross-chain, multi-chain, and all the subsequent conversations that ensue?
Yeah, I think it's pretty similar to what Nikita was saying, where Orca prides itself a lot on user experience. So making things very simple for users to understand and then interact with the protocol. And I think bridges and cross-chain stuff is just a little bit early at the moment. Meaning, like, I think until early last year, like, the bridges didn't really exist or were still in the research phases, and then really went into implementation mainnet last year. So the UX isn't perfect yet, but it will get built probably over the next year or two. So I think for us, it's more just keeping tabs on it. And when it becomes comparable to working on a native chain, can start thinking about integrating it. But definitely a lot of user requests to do cross-chain stuff. But I think from protocol building, like, better to be cautious on this and move a little bit slower than to be a first adopter.
Well, yeah, that's the thing, right? Like, when you want to get $100 off Ethereum on a Solana, you want to do it as quickly as possible. But obviously, I guess there's some flaws in some of the cross-chain technology that's out there now. Yenwen, what's your view of the whole cross-chain versus multi-chain conversation that we've seen kind of unfolding these last couple of months?
I actually agree with here that we are there yet. I'm more believing will be multi-chain, not cross-chain, just like the Kavik that he actually have that an article on this. I also one thing that we as protocol, we have this problem that even if we can cross-chain application, the liquidity scale. We are actually optimism right now, so the liquidity scale on one chain. So it's really hard. It's easier to move the user around or move the traders from around, but liquidity is not that easy. We cannot just if people want to trade on Arbitrum, we just move all the liquidity there, finish that trade, and then move back. So I would just say that there are other issues that really hard to make a cross-chain application, at least on our end, that it is really hard to just run. It's a lot of risk involved. Yeah.
Got it. Oh, Milan.
Oh yeah, no, I would just 100% agree there and say that basically I think one of the problems from a DEX perspective is that bridging from a bunch of different chains and then wrapping tokens fragments all the liquidity for that token. So I think when someone builds like a 1-inch aggregator or a protocol level thing to essentially combine all wrapped versions or a different approach, it becomes a lot easier to kind of support cross-chain or multi-chain assets.
Got it. So this is, oh, no, your turn.
Oh, no, I mean, one thing that is just like, I think Compound is actually doing that. So they want to build their own chain. So like aggregate all the liquidity in one place and then communicate to other chain. But it's really a huge task. So I don't think they really have that, like amount of progress to show to us. Yeah. So yeah, it's hard.
Got it. So this panel is about current trends and DEXes, but crypto is always about that next thing or that next thing. So I'm going to put you on the spot for some future prognostications. I'm going to start with Nikita. What do you think is going to be the next trend in DEXes? I know we touched on some of these things about, keeping loyal users, putting in new experiences into some of these platforms. What do you see as that next big trend? Yield farming was 2 years ago. Here we are 2 years now. What do you see coming 6 months, a year from now as it relates to DEX innovation?
Well, let me tell you something what I currently love about DEXes. And I think a lot of people may not realize, but from the user perspective, centralized exchanges have bid-ask spreads for major, pairs very tight for like Ethereum against like USDT and other assets. And right further along the curve, it becomes less tight. And at the same time, AMMs have no bid-ask spreads, and since they work on formulas. And I think it was what eventually made everything so simple with AMMs on Ethereum. And yet, I would expect that we will see some kind of order book implementation. We are seeing already RFQ orders on Ethereum blockchain, where professional market makers can set up levels and only engage in trading activity when the price targets are hit. And we see a big demand from institutional players who want to consult with us or discuss how we can make it work and what is the best practices. So there are a bunch of protocols that are building like RFQ orders and that already work with market makers. And I feel like it's a very good competition for AMMs, which were so dominant lately, and it would push innovation even further. So we will have in 1 year time a lot of RFQs, AMMs and market makers engaging in DeFi, and then AMMs solving all these issues and getting the lead back to them. Something like this. This is what excites me, and I guess we really need more acceptance, especially from the big players. And since assets they originate on chain, it's the place where they should be traded.
I'm going to toss this to Milan because, correct me if I'm wrong, but Serum, which is the big Solana DeFi major, that's order book based, right? So that's an interesting comment. It kind of dovetails into how Solana is kind of approaching the DEX space. What are your thoughts on some of those comments that Nikita just made, as well as sort of the next big trends in DEX innovation?
Yeah, for sure. So I definitely agree with the request for like public model with market makers participating at the AMM level. I think that'll be really interesting. I don't think anyone's really solved it yet, but 100% that does seem to make sense in the future as like the next step. I think something interesting at more of a technical level is probably the actual efficiency of how you're creating your AMM. So on Solana, like the compute limits come into place, and kind of how efficiently can you open a position, close a position, what are the fees there? So for Orca, at least, our engineers have done a lot of work to pretty much compress a lot of the math so you can get really, really efficient transactions. I think as the fee markets and pretty much different limits on the blockchain itself come into play, that'll start differentiating different protocols. So I think TBD to see where it goes, but in terms of like an order book model versus an AMM model, fees are kind of one of the main differentiators between the two, where you have a lot more transactions going through one versus less transactions, but you can kind of structure them similarly if you toy with it. So yeah, I think that's kind of the main compute limits, technical innovation at that level.
Got it. So as a word guy, I was just in awe of compressing the math. I'm not even going to ask what that actually means, but I am going to ask, like, what is the end game? What does this all lead to? Is this about getting bigger and bigger players trading on these open systems? Or is there some other end game in sight that you see from where you sit?
From my point of view, I think bigger players are coming, and that's like retail is first, bigger players will come, and then the rest of retail will come. I think the end game is the DEXes eventually become very much like a public good. So I'm pretty sure other people have said this, but it's a public good. There will probably be, the long-standing, as long as it's reliable, provides all the functions, it will extract the minimal value from the protocol itself and give essentially just an infrastructure for peer-to-peer trading. So I think in 5 years, it'll look very much like a public good with governance kind of also focused on the public good side.
All right, thank you. That was a good zoom out. I appreciate that. Yenwen, so next big trend in DEXes, forget the current trend. What's the next trend? What are you seeing emerging as it relates to the future of decentralized exchange?
Yep. So speaking of like derivative side, just like what I said that because of Anchor is not there anymore. So I do feel that there are more like people building strategy, maybe providing like 5% to 10% yields, which is already really high. I mean, but I think that will attract like some user, build out that user base. And at the same time, they actually use, the underlying protocol, like Perpetual protocol or like other option protocol, Lyra and other guys. So they can like contract like very complex like financial instrument. But to the retails, it's really easy. You just like, they have this simulation, just like Ribbon, you just like put in your funds and then, you can earn the yields like, even without risk or with a minimum risk. So I would say that would be kind of the direction I see. At least like a lot of people are building those kind of like strategy now. Also at the same time, I think, for spot market, the AMA is pretty mature, but for derivative, either the futures or like options, I think we are still like far on the centralized exchange. Like FKX, they have like much more features what we can provide, but we are still like catching up. I do think that in the next like maybe half year or a year, we can catch up with like FKX and also like option part or other decentralized option projects. So I think that will also like I think the derivative will become more popular because finally we can like achieve those kind of like features.
It's like, that's actually a long-standing question in mine. And my knowledge here may be dated, but I always feel like DeFi derivatives, DeFi options have indeed sort of been behind the curve. Is there a technical reason, a cultural reason, a regulatory reason, or other that you see derivatives in the DeFi space still being a couple steps behind where the spot conversation is? Yeah,
I think definitely in feature-wise, FKX has so many features that, it's so capital efficient. We are just like too far from them. I think that's definitely one thing. So for professional traders, they just don't, compare like the two exchanges, just favor FKX or other central exchange. So I think that will be like one reason. The second reason is that, like I said, farming on Anchor is actually much more profitable than trading on your own or like build your own strategy. So that, or like yield farming or like other thing. On DeFi, there are just like so many things that attract attentions like from retails. So I would say it definitely also creates distraction. But as we are entering a bear market, I would say people will go back and look at Ribbon, look at Year. They will see that it's actually provide really good yields compared to like traditional finance or a central exchange. And then I think that's actually what more for the long term.
Sorry, I'm on mute. I'm not on mute anymore. All right. We got about a minute left. This is the part of like the hip hop track where you shout out other people who are doing interesting things. I want no shilling out of you guys. Okay. I want clean mentions here of projects that are doing something interesting that you think other people here watching this may not be aware of just yet. I'm going to put you on the spot for a quick shout out, Milan. Who are you seeing in the space that's doing something interesting as it relates to DeFi broadly?
So this might be a little bit technical, but there is a Solana hackathon prize winner, at least, called TipLink. And it's essentially innovation at the private key level, where you can send a private key and a wallet all within one link. And it's like a short link. So if I want to send you $1 in Solana, I just send you this link, and then you can go and take that money out of that wallet. I think that's really cool. And I think that'll help like expand DeFi to more people. Imagine you can send an email to 100,000 subscribers, and then in that email, there's a link with like $1 in there in Solana to onboard you. I think that one's really cool.
That's cool. Yenwen, you mentioned Ribbon Finance. Any other ones you want to do a quick shout out for?
Yeah, I think there are actually several new like option protocol. I think that's really cool. Like open. We actually talked to Panelist. Yeah. So actually step back. I would say Uniswap V3. We build on top of Uniswap V3, but I think Uniswap V3 is really interesting, like kind of like base layer. So we build on top of that, and there are the option projects actually built on top of Uniswap V3. And so Uniswap V3 can be used like in different ways. I think that's really cool. So Panelist, I think they are, building this a really interesting like option on top of Uniswap V3. Yep. So, yep.
All right, last word to Nikita. No shills, just positive vibes only. Shout out. Who are you going to shout out?
Absolutely. Well, I love, easy interfaces and ways how people can start interacting with different DeFi things. And Zerion has launched a wallet today, which I've tried and looks really good. And, you can mint NFTs. And, if a newcomer comes, it's very nice. Plus, I'm a big fan of, new DEXes and especially the ones that work with RFQ, request for quote, traditional stuff. So Hashflow and Clipper, they're trying to, bring this competition to AMMs, and I think they deserve a mention.
Fantastic. Thanks for doing that, guys. It's been a fun panel. We're talking about current trends and future trends in DEXes. I'm Zack Seward of Coindesk. We got Milan Patel from Orca. We got Nikita from 1inch, and we got Yenwen from Perpetual. It's been fun. We hope to see you all in Austin, Texas at Coindesk's consensus event next month. That's definitely fun. Check that out. And until then, have a good rest of your day here at the Coin Market Cap thing. All right, that's it. Bye, everybody.